I understand that this year in 2016 with the targeted budget deficit of 2.15%, that you're looking at perhaps 80% conventional and 20% sukuk. Is that changed?
No, it's already 76 conventional, 24% sukuk.
Yeah. How much more do you want to move up when you move it up for this year, when you look at the target of 50% towards the future?
For this year, initially our target is 24%. However, this target is not something that is fixed. I mean, if the market can take up to 26, 27% of the portion, we would be happy to print it. I mean,
yes.
But like I said, we will see. I mean, last year was a big jump because last year we already executed 24% part of the sukuk.
Yeah.
So hopefully this year 26%, 27%, that would be a good.
Let's do a little bit of crystal ball gazing. The 2015 year has been a particularly interesting one for the Islamic market. One of the big factors that played a key role is the price of oil that has come off. When you look at 2016 and the Islamic finance market as the most successful, prolific sukuk issuer, how do you think the impact of oil price will be on going to the sukuk market?
I think I have done some study. The impact is there. Liquidity in the Islamic finance, mostly in the Middle East, has a little bit reduced.
Yes.
I heard also recently the government of Sharjah issue, it was quite tight liquidity.
Yeah.
However, we are quite privileged. I mean, normally in our sukuk issuance, we would go to Islamic Asia, Malaysia, and also Europe and US. Europe and US, like I said, the fact that US always got an allocation, always 20% is quite a big chunk.
Yeah.
Last year, Middle East and Islamic Asia around 41, 42%. US 20%, Indonesia 10 to 14%. So the liquidity reductions in Middle East, we hope we can be compensated from either Asia, Europe, or US. So that would be our aim, and we understand. I cannot expect that Middle East and Asia Islamic still contribute 40-41%, even though it's still possible. But however, I think we have some backup, the European investors and US investors.
Now, in terms of currency, we're also watching which markets you're going into on the offshore market. One of the ones that I thought was quite interesting that I wanted to raise with you is because I know that the Chinese particularly are very active here and looking at opportunities to participate in infrastructure projects. I wonder whether there will be opportunity for Pak Robert to consider doing sukuk renminbi bond.
Not yet. We are studying renminbi bonds issuance, whether it's possible or not. So far for 2016, we have not come up to a conclusion that we go. So far, not yet.
Okay, so looks like it's dollar, of course, that's a regular one.
Yeah.
And then possibly looking at euro.
Yeah, euro, and basically the currency diversification that we had last year so far is still okay with us.
Yeah.
Local currency, US dollar Islamic, euro, and Japanese yen. So that could for 2016.
One final question, Pak Robert, and unless there's a question in the audience, please let me know. When you look at 2016 as running the debt management office, I know you're very comfortable at 27% debt to GDP. The statutory limit is 60%, I believe.
Yes.
You can, Bohok was saying you can stretch a little bit more, guarantee here, guarantee there. But we've seen the Asian financial crisis sticks in our brain, right? I cannot erase that. When you look at 2016 going forward, what keeps you awake at night?
So far, we are quite comfortable. Of course, we are always stay alert. What keeps me awake that you can never predict this financial market. I mean, the Fed fund rate increases and then the U.S. Treasury goes down. We cannot explain it, so I cannot guarantee that this will be always smooth. It looks like it's going to be smooth, but so what I can say is uncertainty is always there.
Yes,
so that's why front loading, take the opportunity, well diversified investor base. That is always our simple strategy.
Yeah, I always think that the reason markets are so unpredictable was because in 2008 somebody developed something called QE. And that QE continues to slosh around, and it's not been flushed out. And so at the end of the day, we're facing quite challenging times. Pa Robert, unless there's a question from the audience, wish you...
And also one more thing regarding the QE. The zero interest rate and negative interest rate,
yes,
also is not in a textbook. You cannot understand it. Wherever you go, there's no negative interest rate in the textbook, so you cannot explain it.
Sometimes I think about going back to school, but apparently the professors there cannot explain it as well. So we're all kind of in the dark, kind of trying to figure out which direction we're going. But Pa Robert, you've managed the debt management office very well. I think the proof of the pudding is the response from the investor base, both domestically and internationally. We wish you well again. We look forward to announcing some of the asset deal of the years from Indonesia. And I'm sure Pa Robert will become from that. All right. Let's give Pa Robert a big hand, ladies and gentlemen.